Hello everyone, so this is the major currencies, having a look at the markets. This is for Sunday the 10th of May 2020, and I'm just going to start off looking at the US dollar basket. So I spoke last week about there not really being much of a clear trend, and it's pretty much kind of come through as expected, unfolded pretty much that way. All I'm going to note here is that there is a level of resistance just above 99, and all I'm going to note here as well is that we have a slightly bullish candle. So you can see the 50, 20 and 10 drifting to the upside. That 100 level still significant, and we have a slightly bullish candle. So generally speaking, in really nice trends, a bullish candle and a break above the high, that would indicate price starting to head higher. We still have this key level. The dollar index does not really seem that interested in leaving it just yet, but as I said before, this is something we got an eye, I'm keeping an eye on. Price is sitting at, has got support at just below 99, and is ping-ponging between these levels, but that level is obviously a big key level. So the general flow of price on looking at the moving averages is to the upside. And I'm just noting, again, every time there's usually a bullish candle, there's a bit of a push to the upside. But the point being is there is no clear trend on the daily. It just looks as though slowly but surely over the coming weeks, there's the potential for it to head up. At some point, there could ultimately be a breakthrough, and then it starts to move more freely, starts to trend. And of course, there is the alternative that it actually finally gives up and starts to head down. All right, at this point in time, if I'm looking for those opportunities, I'll be looking for breaks much further down before I commit to a nicer, healthier trend to the downside. And in the meantime, I'm sort of prepared sort of 55, 45 for it to climb to the upside, but it is definitely struggling with that level, and there's no clear direction. So what it means is that throughout a given week, obviously there'll be a point at which it does start to trend. I'm not necessarily expecting that to happen this week. We're still within this range, but it doesn't always stay within a range for a very long period of time. But this, just initially, at least for the next few days, my expectation is to just keep an eye on these key levels on the daily, the support and resistance levels, and to see how price acts within those. Same thing actually with euro dollar. Again, there's this slow, gentle slip to the downside. Of course, the monthly having found some very strong historical support as well recently. And I'm just looking to see how we ultimately go through that. So basically, because there's no clear trend, I'm just incredibly cautious till we start to break through those levels. Same thing with sterling against the US dollar. It's has managed to come back up, produced a slightly bearish rejection candle, then another slightly bearish candle with a bit of a rejection of the lows, rejection of the highs. There's just no clear direction, so it's pushing and pulling. We're stuck within this range. The Aussie dollar. So what I was looking for last week was we had a really nice strong rejection on the weekly. I said I would prefer for it to come up to test this level. It may still do that. I was looking for it to actually break the low and to follow through on that, which it did in some cases, but obviously immediately reversed. So again, what this is showing me is that there's no clear trend at the moment, although there is overall a trend. The sort of range-like behavior of the US dollar is messing with a lot of things. Kiwi dollar as well. Same thing again, we didn't actually break the low. But again, this is a really nice setup overall compared to, say, euro, dollar, and GBP. This has got the best kind of incumbent trend is what I would say. Then look at dollar yen, it's starting to slip down. Certainly looks as though it's keen on testing these lows. We had some nice breakthrough of support. That was actually a really nice kind of setup. Not the best one I've seen, but it was better than nothing. We've still got similar setups here. The overall thing with yen is that dollar yen is that it can often bounce off these key levels because it is largely range bound. So I won't really commit to dollar yen trades, really like longer term trends, until I see us breaking out of this range in the longer run. And I don't think that's necessarily going to happen anytime soon. Then having a look at dollar Swissy, very much range bound at the moment with tops and bottoms. So this is a unique sort of common pattern at the moment, although it is slipping lower slowly but surely. The same thing again you can see here on that monthly, just largely range bound. So dollar Swissy, dollar yen, largely range bound. Dollar CAD has now gone range bound. So you can see most of them going back to around about March, end of March, they have been generally range bound, and they won't be this way forever at the moment. And so looking to see what happens there. We had a bit of a bullish candle, we've had a reversal on that. So we would get a bearish candle on the previous week, and then we would have a reversal on that. We've had this kind of behavior for the time being. There's also support a little bit lower down, and there's some strong resistance up ahead. So again, not too much clarity on these at the moment. I prefer it obviously when there's a clear trend and then it's obvious for me where I can go and look for opportunities. Not really seeing a lot of those, and actually even on the Aussie and Swissy pairs that I was looking at during the week, there were breaks and follow-throughs and then subsequently reversals. So again, that sort of range-like behavior is pretty common within the currency markets at the moment. It is part of the reason that I obviously don't want to trade just currencies, and obviously there were some other opportunities outside of currencies, looking at, say, the indices, for example, as well as the commodities. So I am cautious. My main focus this week will be keeping an eye on key levels across the board, certainly looking at euro dollar as a kind of a bigger clue, because that tends to be the most accurately inversely correlated with the dollar basket. If I don't have access to a dollar index, I'll have a look at that. And that's really going to be it. So again, we're still around that number, and therefore this range-like behavior, combined with the fact that in the medium term the price could do anything, just means that I am extra cautious. Any moves on a much lower time frame, say 5 minute, 15 minutes, would be for me to be much more opportunistic and therefore much more defensive on taking profits for now. And that's really it. So again, if there's any significant breakouts, then I'll be looking to take advantage of those. But even non-farm payroll, we've got FOMC coming up at some point. So those kind of things we'll look to see if they do. Everything seems to be hinging on jobs numbers out of the US and unemployment. And this is just kind of the status quo for now. So it just means much more cautious with my selection process than I usually have to be. There is not really, from what I can see, an abundance of great trends on the daily time frame, certainly not. So it does mean if I'm looking for currency opportunities, they'll be briefer, probably 1-to-1s, 2-to-1s on the lower time frames.